Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday, 23rd of April. I'm recording the video 10 minutes past 7 p.m. Eastern Standard Time on Thursday Eastern Time. Yesterday's analysis was expecting strong downward movement. Price was very close to the invalidation point, which has now been breached. We have a new all-time high, so we have some clarity. The bull market remains intact. It's time to take a step back again and have a quick look at weekly charts. In the short term, the target for the main wave count is 2187. The target for the more bullish alternate is at 2571. There is a price point which clearly differentiates those two. It's 2253.79. If eventually we see a new high above that point, then the situation changes clearly to a very bullish one. At that stage, I would expect at least another year, if not longer, of a continuation of this long, slow, upward bull market. Let's have a look at the weekly chart. There are a couple of things that I keep coming back to at this weekly chart level for the S&P. Primary waves 1 and 2, and for the B account, primary A and B, have their ends here. This is where primary 2 ends. So this is where primary 3 begins. It starts off 1 2 1 2 1 2. We have 3 4 3 4 3 4, and the fifth wave is extending. I want to see the third wave over here, because here it has stronger momentum than the fifth wave so far, and here it subdivides absolutely perfectly as an impulse, and it's less than 1 point short of 2.618, the length of intermediate wave 1. Only if we see an increase in momentum at the weekly chart level, so that continuing upward movement has stronger momentum than this high back here within the third wave, only if that happens will I revise my labelling of intermediate 3 as over here. For now, this has such a good fit, such a typical look, and such a close Fibonacci ratio. That's how I want to see it. We never did get confirmation that we had a big trend change at primary or cycle degree, and that's why I kept warning that that main wave count came with that very strong caveat. We never did get a breach of this aqua trend line by a close of 3% or more of market value. This trend line will continue to tell us when the bull market is over. Draw it from this low here at 115866 back in November 2011. The second anchor is at 1266.74, the next swing low. Place a parallel copy and push it up to this high here at 1560.33. This double aqua trend line is reasonably shallow and repeatedly tested. It's highly technically significant. The lower one particularly should continue to show us where downward corrections continue to find support. This is the only time it's been overshot at the weekly chart level since 2011, so it's very significant. We have triple or even quadruple technical divergence with MACD trending lower while price continues to slowly trend higher. That's the biggest reason why I'm going to continue that with the main wave count seeing intermediate wave 5 as an ending contracting diagonal. So intermediate 5 begins here. My two bull counts are looking at this movement differently. From this low to this high, it's possible to see this movement as either a zigzag or an impulse. It's ambiguous. The subdivisions fit either way. It actually fits a little bit better as a zigzag. When it's an impulse, we have a running flat back in here, which ever so slightly reduces that probability. If intermediate 5 is an ending diagonal, then all of the subwaves must be zigzags, and the fourth wave must overlap first wave price territory. So we have a zigzag for 1 ending up here, this point here. Here's the daily chart. A zigzag for 2, a zigzag for 3, a zigzag for 4. 3 is shorter than 1, 4 is shorter than 2. The diagonal is contracting. 4 overlaps into wave 1 price territory. So now we have a zigzag for 5, 5, 3, 5, incomplete. Minute C will reach equality in length with A at 2187. That may be high enough to see the 1-3 trend line slightly overshot for a fifth wave of a contracting diagonal. That is the most common look. So again, that's what this main wave count now will expect. Within minute C, no second wave correction may move beyond its start below 2039.68. This is the black channel copied over from the weekly chart. It's drawn using Elliott's technique around the whole of primary 3. Intermediate wave 5 should end again when price comes up very close to the upper edge of this black channel. The diagonal is contracting, so the fifth wave may not be longer than equality with the third, and a third wave may never be the shortest. This main wave count has a very clear limit of 2253.79. If we see a new high eventually above that price point, then the very, very bullish alternate will be confirmed. Above that price point, it's telling us that we're probably going to see at least another year, if not a few years, of continuing upward movement from the S&P. I've tried to see another way to label this diagonal that doesn't have the overshoots and the breaches of the 2-4 trend line, but I can't see minor wave 4 ending anywhere up here because it must overlap minor wave 1 price territory. That's the problem with this wave count. The 2-4 trend line of the diagonal is breached. Diagonals almost always adhere beautifully to their trend lines, apart from some small overshoots. This is acceptable. This is highly unusual. But price is telling us this is entirely possible. This wave count does remain valid. Let's look at the hourly chart where B ends down here, this point here. So we have 1 expanded flat for 2, 3, 3, 5. That leaves this downward movement a nice clear 5-wave impulse. And a third wave has probably begun here. With 1, 2, we may have been moved toward the middle of a third wave, although we could move the degree of labelling here down 1 degree. We could still have the first wave to complete. If that's the case, the following second wave can't move beyond its start below 2091.05. The third wave so far is showing an increase in momentum beyond the first wave, but Minuet wave 3 in its entirety does not show stronger momentum than Minuet 1. I would expect Minuet 3 at its end to show an increase in upward momentum beyond that seen back here for Minuet wave 1. So the wave count now expects an increase in upward movement, an increase in upward momentum. At 2168, Minuet 3 will reach 1.618, the length of Minuet 1. Draw a base channel around the first and second wave. Look for the third wave to initially find some resistance and then have the power to break through resistance at the upper edge of this channel. Along the way, downward corrections should find support at the lower edge of that channel if indeed they get down that far. This is the bullish alternate which I presented first a couple of days ago. Minor wave 1 at the daily chart level can be seen as a 3 or a 5 ending up here. If we see it as a 5, there's a small problem with a running flat off to the left of the chart. It's only a small problem though. So with 1 and this deep movement for 2 over here, this may be where a third wave within primary 3 has begun. With all of this choppy overlapping, I can't see a diagonal structure complete in here, so a diagonal structure is the best, most likely explanation. It may be a leading contracting diagonal for a first wave, with a zigzag for 1, a zigzag for 2, 3 would be incomplete. We still need more upward movement for both wave counts, so both bullish wave counts point to the same direction in the short term. For this wave count then we'd have a fourth wave zigzag which must overlap back into first wave price territory and can't move beyond the end of the second wave below 1980.90. This is a very, very bullish alternate. If the main wave count is invalidated above 2253.79, we will have confirmation that the S&P is in a long, long sustained bull market. At 2571, intermediate 5 would reach 2.618, the length of intermediate 3. At 2880, primary 3 will reach 2.618, the length of primary wave 1. These are very bullish targets and they're probably not going to be met for at least a couple of years. The situation for this idea is extremely bullish indeed. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.